Hey guys, hope you and the families are doing well. I'm going to take you through my swing trades from last week. Now, if you follow my channel for a little while, you know I talk a lot about trigger bars, shakeout demand tails, and gap down reversal bars as swing trading setups. So I'm going to teach you those three swing trading setups by going through swing trades that I was targeting last week. Market Surge are today's video sponsor. If you're interested in a discounted trial, then you'll find a link to that in the comment section and the description below. So before we start analysing the charts and I teach you the specific setups and the thought process for why I was looking to target that stock at that specific moment in time, let me take you through my session plans from last week. So this is the one for the 18th of November 2024. If I scroll down here, you can see I was targeting VST, cause and CIFR. You can see the pivot and then the initial stop loss. This will make sense when we're analysing the charts in a minute's time or so. If we then look at the 19th of November, Reddit MIR and also ticker ALAB, the 20th of November, we scroll down here, CIFR and OKLO, and then the 21st of November 2024, OKLO, and then the 22nd of November being Friday last week. If we scroll down here, PASS, CDE, a couple of precious metal miners there, and also Carvana, CVNA. You can see the pivots and the initial stop loss. So when we start going through the charts, those levels will all make sense to you. So now we've got the charts loaded up, and hopefully these price levels will make a little bit more sense to you in terms of the pivot and the placement of the initial stop loss. So the pivot is the price in which I'm looking to enter the position, and obviously the initial stop loss is the initial stop loss placement. Now for all 6 of these setups, I was looking to use a buy stop limit order as my order entry method technique. When we get onto the next set of trades and we look at OKLO, I was looking to use an opening range breakout, so we'll talk about that when we get to that part of the video. Now, if you've watched the blueprint video on my YouTube channel, and I'll put a link to it in the comment section below, that really teaches my trading process for how I look for these swing trades, and that centers heavily around the types of candlesticks that I see in leading stocks around one or more key daily moving averages. So that's going to be trigger bars, shakeout demand tails, and gap down reversal bars. Now in this instance, for these 6 trades, that's around the 10-day EMA. So with Reddit, this is what I call a trigger bar. It's a low volume inside bar around one or more key daily moving averages, being the 10-day EMA. With cause, this is a shakeout demand tail around the 10-day EMA. A shakeout demand tail with Cypher as well. Both of these crypto mining stocks, one worked, one didn't. Trading is a game of probabilities. It's not a game of certainty. So even though both were crypto mining related stocks, setting up for me on the same session, one works, one doesn't work. It's the nature of the beast. And then VST, this is what I call a gap down reversal bar off its 10-day EMA. So trigger bars, shakeout demand tails, and gap down reversal bars are the 3 types of candlesticks, and I put those under an umbrella of the types of swing trades that I'm looking to set up around the 10-day EMA, the 21-day EMA, or the 50-day SMA. When we look at a couple of the silver miners, such as Pan American Silver, you're going to see a shakeout demand tail around a clustering of key daily moving averages. So it's not necessarily it's just a gap down reverse bar off of one key daily moving averages, sometimes a daily moving average. Sometimes you can have a clustering or a convergence of key daily moving averages, such as the 10-day and the 21-day, or potentially the 21 and the 50 and the 10, and they are all there. Now I like to go a step further in my trading, and what I'm trying to do is identify what are the leading themes, what are the leading groups in the market right now, and then I try and look for, okay, what are the true market leaders and or momentum leaders within these groups, within these themes. So in terms of the true market leaders, that's going to be everything that William O'Neill taught you in his book, How to Make Money in Stock. It's looking at the earnings, the sales, the EPS estimates, the story, the growth ahead of it. Is it in a new area of the market, such as AI, or potentially it's like VST and M and MIR, which are both clean alternative energy leaders, and the real driver there is actually fuel for AI. So it's fueling AI, and it's kind of a picks and shovels play off of that. So then I'm trying to identify the leadership, both in terms of fundamentals, but also in terms of technical strength as well. And then do they display momentum leader characteristics? What is the liquidity? What is the 20-day ADR percentage? What is the initial risk relative to the 20-day ADR percentage? Everything that is taught in the blueprint video on my YouTube channel. And again, I'll link to that down below. I think it'll be a very useful video, so you can see how I'm actually looking to trade these from setups I was targeting last week, and then you can see and have a very thorough video in terms of the education for free on YouTube as well by watching that video. Okay, so I'm looking for inside bars around 10-day EMAs. I'm looking for shakeout demand tails around 10-day, 21-day, potentially 50 days. I'm looking for gap down reverse bars around 10-day, 21 days. Something else that I like looking for as well is very positive earnings reactions. Now, sometimes earnings reactions can look a little bit different. So if we look at, say, ALAB, for instance, so ALAB here, very positive earnings reaction Okay, powering up, this stock is super duper strong. Arguably, it's a leader in terms of semiconductors right now. Really is currently outperforming Nvidia, Broadcom, TSM, ARM Holdings as well. It's really, really strong. Look at the volume coming through. I call this bullish synchronicity. Really strong action, pulls in, shakes out underneath the 10-day EMA. Stock was showing a lot of relative strength as well versus the major indexes. That's something else key that I look for. And then you get this really nice shakeout to Martell off the 10-day EMA. So I'm targeting it through the high, stop loss just underneath the low buy cent there, using a buy stop limit order, and then a nice move here coming through. It may pull back down and kind of set and give me another opportunity next week. Looking very, very strong, but a couple of supply shoots up there, so it may just kind of pull back down. This may be a spot where I'm then looking to add, but this here is a very strong earnings reaction. Okay, gap up, push, nice action going on. You can see similar action with Reddit as well, very similar in terms of the gap up there on the earnings coming through, and then it pushes up, sets into its 10-day EMA with that inside bar. Now MIR is a bit different to those ones. If I zoom out here, this is actually a big gap down reversal bar on the earnings reaction. Okay, so the prior closes here, it gaps down here below its 21-day EMA, which is the blue line on my chart, gaps down here, and then look at the strength of the reversal. Imagine how many weak hands that bar there stopped out. Okay, it gaps down here, it's going to trigger a load of stop losses. People that are potentially long thinking, oh my word, this thing's just gapped down big on its earnings, it's gapping down nearly like 9% or so. I'm out of this thing, I'm out of this thing, I'm out of this thing. And then what does it do? Well, it gaps down and then reverses. Really strong bar, actually then turns into a bullish engulfing candlestick. So you can get very strong earnings reactions, but they can look very, very different. So A-Lab's earnings reactions compared to MIR look very, very different, but both are signaling to me the bigger boys and girls are in there. Other things that I like to look for are pops in the volume ahead of these type of setups. So if you look at cores, for instance, look at the volume here, look at the volume here, look at the volume that's coming through here post earnings as well. Look at the strength, look at the strength, look at the strength. Okay, this is just signaling to me the bigger boys and girls are in there. I'm seeing a lot of visual accumulation, a lot of visual demand coming through, and then I don't want to be chasing it up here. Okay, I'm not going to chase up here. Pull in, set around the 10-day EMA, nice shakeout to Martell, and then it turns around and goes in there. So I thought, again, setting up on the same day, you get some nice pops in the volume coming through here, but this one stopped out of it. Happens. So it's going to happen. Not every single trade is going to work. That is why you want to think about your initial risk relative to the potential reward. I like to think about initial risk relative to 20-day ADR percentages as well as a nice risk metric. Try and keep it half to 2/3. Sometimes with a bigger gap down reverse bar, such as you see with like VST, for instance, it can be a little bit closer to the 20-day ADR percentage. But hopefully that gives you a good feel there of some trigger bars, gap down reverse bars, and shakeout to Martells. Let me take you across to the next 4 trades that we're going to analyze. So some more charts for you here, and let's start by analysing the silver miners, which are on the left-hand side. So that's going to be PAAS and CDE. Now the setups here are a little bit different. We've seen a lot of weakness of late in the precious metal mining group post-US election, but we're starting to see the leaders coming back and providing setup opportunities around a clustering of key daily moving averages, and I think importantly as well, they're 50-day simple period moving averages. So for me, Pan American Silver and CDE were 2 of the leaders of the silver miner group from a technical perspective, but also from a fundamental perspective as well. So with Pan American Silver, puts in this shakeout to Martell off a clustering of key daily moving averages. Now on my chart, the black line is the 10-day EMA, blue line 21-day EMA, purple line 50-day simple period moving average, the grey line the 65-day EMA, and the red line is the 200-day simple period moving average. So what you can see here with Pan American Silver is a shakeout to Martell off 3 of those key daily moving averages, the 10-day, the 21-day, and the 50-day. Now Pan American Silver, obviously it wasn't working out here. Okay, I get filled in this region, and here I actually exited early because it just wasn't working. I was thinking probably on Monday, maybe Tuesday, this is just going to shake out again. So I exited here for a 1.56% loss on the position. And guess what? I'm going to have losing trades. CDE, I was actually able to free roll this one using what I call active risk mitigation. Okay, so I'm taking the trade. I was able to free roll into this pop here, and then I get stopped out as it pulls back down here. So I'll quite commonly do that in terms of my positions. It's called active risk mitigation. It's taught on my platform. Also taught to a lesser extent in the blueprint video as well, which again, I'll put a link to that in the comment section below. Now you can see these silver miners, they generally prefer pullbacks, but are they going to work every time? Absolutely not. They're going to work every time. But you can see here, nice shakeout to Martells around the 21-day EMA, the 65 is there, the 50 is there as well. You can see it with CDE as well. A couple of nice shakeouts coming through here, right off the 50 and the 65-day EMA. So these were some of the ones that I was trying, and the group, it just wasn't ready, but we may see it next week. So these are still on my radar, right? Because it may be next week Monday, Tuesday, Wednesday, we'll see how the action's going to unfold. We may see a nice shakeout demand tail for Pan American Silver just underneath, say, its 50-day. So we may see something like that. We may see a bar that looks like this occurring for CDE just over here. So maybe I'm then looking to retarget them. But commodity stocks, I'd rather trade them on pullbacks. Okay, I don't want to be kind of chasing them up here. I want to watch and wait for the pullbacks. I want them closer to 21-day EMAs, if not 50-day simple period moving averages. And there's some big bases around for the precious metal miners. So sometimes you can have an idea about, okay, this group, it's setting up, it's looking pretty constructive. Some of the leaders are setting up. You take a couple of trades and they don't work. Again, trading is a game of probabilities. It isn't a game of certainty. So I don't get emotional about it. I just go, okay, exit, whatever. Maybe it resets. Maybe there's going to be better opportunities elsewhere. We'll talk about OKLO last. We'll talk about Carvana. So Carvana, good earnings gap up. So you're seeing a theme here, right, with some of these earnings gap ups in Reddit, in ALAB. There's my dyslexia and my stutter trying to get that wrong right. To get ALAB, that's a little bit easier, isn't it? But here you can see a big earnings gap up, pulls into the 10-day EMA, bounces, pulls back into the 10-day EMA. That's a bit of a shakeout demand tail forming there, and starts to build this really nice flag type pattern. You see that? Really nice flag type pattern post earnings, and it puts in nearly this inside bar. So it's kind of trigger bar-esque for me. It's a little kind of gap down reversal bar, in a way, tiny little gap down. But here, trigger bar right on the 10-day EMA. Looks very, very similar to the Reddit setup, right? If I was to just put Reddit over here. Okay, here's Reddit. So don't these look pretty eerily similar in terms of how they set up? And this is the thing, Livermore spotted it 100 years ago. Chart patterns repeat. Patterns keep on repeating. So here you can see very, very similar in terms of the setup. Now with Carvana, I was using a buy stop limit order, and this will sometimes happen as well. So I was using a buy stop limit order, and my limit was 0.5%. So I'm looking to target it on this day here, okay, Friday the 22nd of November, through the high of what I call the trigger bar on the 21st of November. Stop loss a couple of cents underneath the low, underneath the round number as well. So 243.47 is this placement of the initial stop loss. Now the limit on my buy stop limit order was 0.5% above the high of that 21st of November. So as Carvana starts powering out, I didn't get filled any shares. So this can happen. Okay, so I was using a buy stop limit order, the limit 0.5% above the prior session's high, and I didn't get filled any shares. So then is it a bit annoying when the stock then powers out like that, and it's like, I could have free rolled into that, and that there was a nice move, about 2 times the initial risk how I was planning it on a single session. Yeah, it is annoying, but it happens. So again, could I have used an opening range breakout in that instance? Yeah, maybe not. Sometimes hindsight is 2020, right? So that one there a little bit annoying, but in terms of the setup, really nice setup, flag type pattern, trigger bar action following the post earnings gap up on its 10-day EMA. Then if we go with OKLO, now this can happen as well. So this one here, okay, I somewhat messed this one up actually. So I was looking to use an opening range breakout. So this is how I should have set the trade up. So I should have been targeting it with a buy stop limit order through the high of November 20th. Stop loss underneath the low of the day by a cent or a couple of cents or so, right? That's how I should have. What I did though is I overthought it. So this is a very dangerous thing in trading. Overthinking. You don't need to think so much. If any of you have watched the new Top Gun film where Maverick says, don't think, just do. And a lot of trading is don't think too much, just do. So what I did in this instance here is I overthought it, and I tried to get a little bit too clever with it. So what I did is I went, do you know what? I'm going to control the risk here, because I don't want to have an initial stop loss of, if I just put this in, I don't want to have an initial stop loss of approaching 9%. With a little bit of slippage, this will be 9% easily, right? If I get a little bit of slippage in here, okay, it's going to be a 9% stop loss. Now, 9% for me would be a very, very wide stop loss. However, it's not the widest of stops when you consider that the 20-day ADR percentage of the stock is 16.3%. That is a really, really good momentum stock, okay? OKLO as well, one of the real leaders in terms of the clean alternative energy thing. Sam Altman, obviously one of the founders of OpenAI, is director of the board. He is chairman of the board of directors with OKLO. So he's obviously got some friends in high places. So this here is putting in this shakeout demand tail around the 21-day EMA. So what I should have done is just gone buy stop limit order, target through the high, stop loss underneath the low, size the position down to account for the wider stop loss, because the stop loss as an initial risk metric versus the 20-day ADR percentage is still pretty favorable at close to 2/3. just over a half, pushing 2/3. It's kind of okay. Above 10%, I would have gone, no. But here I was overthinking it. And what I did is I went, well, do you know what? I'm actually going to use a 5-minute opening range breakout on this one here. So what I was looking for is the stock to either gap up and push or just move through like that, and I'll then target the 5-minute ORB. What happened with the stock is it initially gapped down. If I zoom in a little bit, okay, it initially gapped down, sold down. So then I was like, if I'm then going to target it through the high using a 5-minute ORB, it's then going to be still like an 8% stop loss. I don't want to stop loss that. I don't want to stop loss that wide. What I should have maybe done here is thought about it relative to the 20-day ADR percentage and realized it's still pretty favorable. It's one of the real momentum leaders here. Just size down the position to account for the wider initial stop loss, so I'm still controlling the account equity risk. So that one there is one that I messed up by overthinking it, and I should have just gone with a buy stop limit order. So anyway, I'll wrap the video up there, guys. Hopefully that gives you a little bit of a flavor for the types of setups I target and how I kind of think about it in terms of looking for developing themes or looking for the strongest groups, the strongest themes in the market, then trying to pinpoint where am I seeing the leadership, both from a technical perspective, but also a fundamental perspective, the types of setups I look to target as well for these swing trades. So trigger bars, shakeout demand tails, gap down reverse bars around one or more key daily moving averages. Most commonly, that's going to be around 10-day EMAs, potentially 21-day EMAs, and sometimes you can have a nice clustering of 10, 21, and 50-day simple period moving averages. And it also shows you that you're not going to be right all the time. In trading, you're going to have lots and lots of losing trades, so get used to it and really think about controlling your initial risk relative to potential reward. So thank you for watching, thank you for supporting the YouTube channel, and as always, I look forward to seeing you in a future video.